Welcome to the What to Watch video update. This is a video that I do once a week where I pull out those charts that I'm really looking at that seem to be talking to us right now. And I list them with a positive side and a negative side. And we're switching over and looking more negative right now because we fell down below the 20 period moving average this past week. But for right now, after Friday's close, the 50 period moving average is still holding. So we've turned negative in the short term, but we're still positive in the intermediate term. But we're having some intermediate term indicators actually switching over and looking more negative. But at the same time, we have other areas of the market that seem to be holding up. So we'll go through and just see what these look like. And then this will be the focus of what we watch in the upcoming week. This is being prepared for Monday, November 4th. Before I get into the charts, there's a thing called the SPX Investing Program. It's a program I've developed. It's free until the end of 2024. If you want to learn more about that, there's a link that will take you to the website as well as to a video that talks more about that. You can also email me with any questions. Also, the daily video is the real foundation. And these things that were creeping up during the week, we weren't really sure if the market was going to break to the upside or to the downside, but we were seeing some weakness. And so Thursday's big down move really didn't catch us off guard. It was not really a surprise. You're really going to find those things out as we go along with the daily video update. And that's what technical analysis is. It's not trying to forecast what's going to happen. It's evaluating the current conditions and then saying, okay, the probability is that we're looking more positive or we're looking more negative. Let's go through and look at the positive charts. Even though we're seeing some weakness with the advanced decline line based on price and volume, we're still above an advancing moving average. So that is still positive for the time being. Also, we're seeing a little bit of trailing off of the new highs here, a real contraction, a little bit of an expansion of the new lows. That's the positive side. There's a lot more green than red. However, the 5-day moving average is going down and the 10-day moving average is also going down. But that's more of a contraction of the new highs rather than an expansion of the new lows. This is still looking okay. Seeing some weakness here with the green line, the blue line and the red line, but the blue line is still above the red line. That means on an intraday basis, large cap growth is still outperforming large cap value. And even though we're seeing some weakness in the small and mid caps, the S&P growth to value ratio that we see here, it did pull back, but it's still holding together and it's still in a longer term uptrend for the time being. If this can turn around and start to go up, that would be more positive for the S&P. We're also seeing the discretionary to staples ratio looking pretty healthy right now, pulled back on Thursday and was flat on Friday. And we're seeing a little bit of an improvement with the discretionary sector as we're seeing some weakness in staples right now. So this is still looking positive for the time being, and we're still in an uptrend with this ratio. The growth to value ratios are looking okay right now with the Qs to S&P coming back down to the moving average. We would like that to go up to be more positive. Discretionary to S&P is also showing an improvement. It's above an advancing moving average. And we would like to see this stronger too when we look at large cap growth versus large cap value. We're pretty much down at the moving average, but we haven't quite dropped below that yet. So at the large caps, we're looking okay, seeing a little bit of an improvement here with the mid cap growth to value ratio as well as the small cap growth to value ratio. And for right now, we're positive because we are still above the 50 period moving averages. And I plot a simple and exponential moving average here. We fell below the 20s. That's short term, but this is more the intermediate term as I measure that. As long as we stay above this, the intermediate term trend will remain positive. If we drop below that and close below that, that's when this would turn negative. And we're seeing a little bit of a pullback here with the cumulative advanced decline line based on price for the S&P and volume, but they're not really falling apart, at least yet. We're seeing some weakness in the advanced decline line studies with the NYSE common stock dropping below the moving average. The reason this is on the positive side is the S&P is just down to its moving average, still a little bit above the moving average with the mid caps, and we're below the moving average with the small caps. So there is some negative signs in here, but I mainly focus on the S&P 500. The NASDAQ, pretty much right at its pivot point, didn't really see a strong week, but it didn't fall apart either, and it's still above its 50-day moving average. The NASDAQ 100 also at its pivot point. I know that's hard to see with these markings in here, but we're also still above the 50-day moving average. Financial sector seeing a little bit of weakness, but still above its 50-day moving average. The Wilshire, a broad market measure, still slightly above its 50-day moving average. Total U.S. stock ETF also coming down, but still above its 50-day moving average. Then we look at the ratio of the Qs, or the NASDAQ 100, to the IWM, which are the small caps. This ratio is still holding up for the time being. Also holding up is the ratio between the NASDAQ 100 and the Dow. Longer term, the weekly chart of the NASDAQ 100, even though we did decline this past week, we're still above this upward sloping trend line going back to 2009. The market is still anticipating a soft landing. Now, we saw some weakness in that. We're coming into the top end of the rainbow, but overall, the lines are still going up, and we've spent a lot of the recent time above the rainbow itself. So this is still positive, but if we see more weakness, this could turn over and look negative. We look at another ratio of the semiconductors to the Dow. Semis have been under pressure lately. And when you look at the sector all by itself, it's in danger of generating a death cross where the 50-day moving average crosses below the 200-day moving average. But so far, we're not really seeing this come down when we compare it to the Dow. We would like this to go back up to be even more positive and get closer to this blue line. Then we look at the negative side, and we're kind of longer with this list this week. After getting up to the 75 area as far as sentiment is concerned, we've been coming down. And so the context overall is that we've been dropping here, and that's more negative. We ticked up a little bit in Friday's session, but overall, the move has been to the downside here, and that's more negative. We did see the red line cross above the green line with the ADX. So that's turned the trend from positive over to negative, although it's still a weakening trend since we're below the moving average, although we are still trending because we are above 20 here. If the red line continues to go up and the green line goes down, we would eventually see the ADX cross above the moving average and show a strengthening trend. And this had been looking better going back to about the middle of October. The intraday growth to value ratio for the S&P had been going up for the most part. We saw the big down move on Thursday, a little bit of a bounce on Friday. If this continues to go up, that would turn this more positive. But with the big drop, I've switched this over to the negative side. And if we continue to fall, that would be even more negative. The VIX is still giving us very high readings. We got up over 23 in Thursday's session. We dropped down below 22 in Friday's session, but we're above the 20 level where we see negative annualized returns. We're back up into the red area now with the skew index, where it had dropped down after being up here for a couple of weeks. This just means that the market is expecting some kind of a big move, and based on what drew this down was a move to the downside. So that's why I have this on the negative side of things. The momentum for the VIX is up, and that tends to be more negative for stocks. And the volatility for both stocks and bonds is quite high right now. We have the MOVE index on top showing that as bonds have been going down based on price and up based on yield, volatility has been picking up, and we're getting very high readings with the VIX to measure the volatility of stocks. And we see at the bottom that the correlation between the two is quite strong. Now, this does not measure price. This just measures volatility and compares it with each other. And since it's really going up, that is more negative. Accumulation distribution turned over and went negative. We dropped below the moving average now. So this is a smart money indicator that went from positive to negative. We're also below on a short-term and intermediate-term basis when we look at the blue line and the red line with the advanced decline ratio. And the condition of the 20-period moving average is showing some weakness now. We're rolling over with both the green line and the blue line as we're below both of them. And we did end up dropping below the 20-period simple and exponential moving averages in Thursday's session. We bounced back up on Friday, but this was an inside day where we didn't exceed the high set on Thursday or the low. We'll have to see if we can get back above both this red line and this blue line. That would turn the trend back positive, but for right now, it is negative. And the stocks inside of the S&P above their 20-period moving averages is below 50. Ticked up a little bit on Friday, but we're overall seeing a decline here. And then this was looking positive. When we take a 20-period simple moving average of the open, high, low, close, we had been above this little mini rainbow. Well, now we're below it. When we drop below it and we start to come back up, then one of these lines may act as overhead resistance. The condition of the 50-period moving average. Now, we're still positive when we look at the simple and exponential, but this is a double and triple exponential moving average. We're dropping below both lines, and the red line is starting to cross below the blue line, and both of them are starting to go down. So we are seeing a weakness in the condition of the trend. We just haven't closed below the 50-day moving averages yet. Then those stocks that are above their 50-day moving average inside the S&P dropping below 50, even though it ticked up a little bit on Friday. So we're down below the 20-period moving averages. That's turned the short-term trend to negative, but as long as we stay above these lines right here, which are the 50-day moving averages, the intermediate term trend is still positive. Then we have 100-period moving averages as well as 200-period moving averages. These are still positive since price is above both, and they're still going up. Seeing a little bit of weakness here with the cumulative advanced decline line for the NYSE. We actually dropped below the moving average, and we're dropping a little bit below the moving average with the regular NYSE advanced decline line. Also, this is calculated in a slightly different way, dropping below the moving average here, even though longer term, we're still positive. We look at common stock based on price on the NYSE, showing a decline here, as well as based on volume. The S&P McClellan oscillator, negative, an extreme negative now, but whenever we're below zero, that turns the summation index negative. And so for right now, this could still go lower and turn even more negative. So the summation index based on price and volume continue to be negative. And even the NYSE McClellan oscillator is below zero after it had been holding up a little bit better. We're not extreme with this reading, but we are negative. So when that's negative, the summation index based on price and volume are continuing to decline. The Swenlin trading oscillator was looking a little bit better, but in Thursday and Friday session, we're still below zero based on price and volume. We went up slightly based on price, but we went down based on volume. But since they're both below zero, this is still negative. And we saw dots on top now with the parabolic SAR. That switched from being positive when the dots are underneath to now looking negative with the dots on top. Momentum is negative in the short, intermediate, and long term here. We're declining below the moving averages. And even though the bullish percent index can still be considered positive since it's above 50, well, we continue to decline. Even with the slight up move that we saw in Friday's session, the BPI continued to drop off. So the context of this is that it's declining, and so that's negative. Also, we're seeing things turn more negative with the NYSE bullish percent index, even though it's still above 50. And we're still above 50 with the NASDAQ 100 bullish percent index, but we have been declining. Taking money flow, another smart money indicator, has now turned negative with the red line going down. Chaikin oscillator, also negative, but could be getting extreme negative here. This might end up giving some support if we finally stop going down and turn around and go back up. The vortex also crossed over negative with the red line going above the green line. And the momentum for the NASDAQ 100 continues to be negative. This is what's causing some problems. We're going up with the 10-year yield really pretty fast here. We're above the 200-day moving average. And this started to go up about the time the Fed came in and cut rates. You would think rates would either stabilize or continue to fall, but just the opposite of that has been what's happening. And that's what's causing some problems with these charts. When we look at cash with 3 to 7 year bonds, this ratio you would think would be going down as interest rates should be going down, but this ratio is actually going up, and that tends to be more negative. Also, we look at tips, the 7 to 10-year bonds. This ratio should be going down and it's still in a downtrend, but it has been going up lately. And we're seeing some weakness here with home construction to 3 to 7-year bonds. As interest rates have been going back up, the home construction ETF has been underperforming and going into the rainbow. And we look at growth versus value. Earlier in the week, we were actually coming up out of the rainbow, but then we had the big down day on Thursday, and now we're back down into the rainbow. And the Qs are also underneath their 20-day moving average. That's the negative side, but on the positive side, they're still above their 50-day moving average. And then we want to keep an eye on jobless claims. They really spiked up and then really came down. So we're getting kind of all over the place here. The moving average is actually turning down. Now, that could be positive for the economy, but if we're seeing where jobless claims continue to fall, that may mean the employment situation is stronger than expected, and the Fed may not be as likely to cut rates. But with the employment situation report that came out on Friday that was much weaker than expected, that's pretty much locked in a 25 basis point cut at the upcoming meeting on November 7th. We want to keep an eye on continuing claims. Even though they dropped off, the moving average is still continuing to go up, showing a slight weakness in the overall employment situation. And the dollar has really been going up here, but it's still in a downtrend. We just want to watch this because the stock market likes a weaker dollar. Oil, we're also watching this mainly for geopolitical reasons, but it really hasn't been moving. We dropped under 70 and we're right in the 69 level right now. So thank you. I hope you found this helpful. Please feel free to check out the other videos that I have posted. Have a great weekend, and I will talk to you in the next video.